Ladies and gentlemen, good day and welcome to General Insurance Corporation of India Q1 FY23 earnings conference call. As a reminder, all participant lines will be in listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vinay Sarda from Ernst & Young. Thank you, and over to you, Mr. Sarda.
Thanks, Tanvi. Good evening to all the participants on the call, and thanks for joining this Q1 FY23 earnings call for General Insurance Corporation of India. Please note that we have mailed the press release to everyone, and you can also see the results on our website as well as it has been uploaded on the stock exchange. In case if you have not received the same, you can write to us, and we will be happy to send it over to you. Before we proceed with the call, let me remind you that the discussion may contain forward-looking statements which may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our businesses that could cause future result, performance, or achievement to differ significantly from what is expressed or implied by such forward-looking statements. To take us through the results and answer our questions, we have with us the management of GIC represented by Mr. Devesh Srivastava, Chairman and Managing Director, and other top members of the management. We will be starting the call with a brief overview of the quarter gone past, and then we follow up with a Q&A session. With that said, I will now hand over the call to Mr. Devesh Srivastava, sir. Over to you, sir.
Thank you, Vinayji. Good evening, everyone. I am pleased to announce the financial performance for the quarter and full year ended June 30th, 2022. We would like to reaffirm that we are continuously taking all necessary measures to improve our overall profitability, and it has been a constant endeavor to bring down the combined ratio below 100. We continue to be selective with a sole focus on underwriting profitability. Let me now take you through some of the key highlights of the financial performance. The gross premium income of the corporation was rupees 11,021 crores for Q1 FY23 as compared to rupees 14,289 crores for the Q1 FY22. The investment income stood at rupees 1,890 crores in Q1 FY23 as compared to rupees 1,794 crores in Q1 FY22. Incurred claims ratio stood at 94.7% in Q1 FY23 as compared to 104.3% in Q1 FY22. Combined ratio in Q1 FY23 decreased to 110.97% versus 123.36% for Q1 FY22. The adjusted combined ratio, by taking into consideration the policyholder's investment income, works out to 97% for Q1 FY23 as compared to 112% in Q1 FY22. The company recorded profit before tax of rupees 988 crores in Q1 FY23 as against loss before tax of rupees 1,166 crores in Q1 FY22 and profit after tax of rupees 689 crores in Q1 FY23 against loss after tax of 771 crores in Q1 FY22. Solvency stood at 2.14 as on 30/6/22 as compared to 1.74 as on 30/6/21. Net worth of the company without fair value change account stood at rupees 24,744 crores as on 30/6/22 as against 21,285 crores as on 30/6/2021. Net worth of the company including fair value change account stood at rupees 53,741 crores as on 30/6/22 as against 50,673 crores as on 30/6/2021. On the premium breakup, domestic premium for Q1 FY23 is rupees 8,247 crores and the international is rupees 2,774 crores. The percentage split is domestic 75% and international 25%. So there is a degrowth in the domestic premium by around 21%, while the international book has decreased by 28%. We are seeing gradual improvement in the external environment and remain confident of improved performance going forward, as we expect the combined ratio to start moving downwards in the coming quarters. Having given the highlights, we will now open the floor for questions from the interested parties. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, if you wish to ask questions, please enter star and 1. The first question is from the line of Arjun from Spark Capital. Please go ahead.
Yeah, hello sir, thanks for this opportunity. So just wanted to understand that we have seen a sharp decline in a crop segment. If you can point out the reason for this, is it because of the new bead model that is being implemented? How many states are adopting to this model? What would be the impact? First, your reason as to why the decline is and the impact of bead model and adoption, etc. Your commentary on that would be helpful.
Arjunji, I will just like to give a first overview and then I will request the general manager in charge of crop to step in.
Okay.
If you recall, about 4 or 5 quarters ago, crop was a very heavy percentage in our portfolio, and the demand was that we should, trim it, get it to more manageable levels, and contain the high combined ratio that crop was facing. So this is the point where we started doing a lot of, pruning of the portfolio, and today we are at a point when our crop portfolio is about 25% of our total book in the Q1 that we have closed, which is where we would want to be. Now, obviously, there have been changes in the scheme as well. PMAPY has also become the bead model as you talk of. So I will let Mr. Hitesh Joshi to step in now so that he can also chip in.
So, sir, here it is not really anything in particular about the bid model, because even with the same model, different states, different districts, different clusters can be priced in different ways by different market participants. So the price adequacy can be present or absent despite the kind of model that is chosen by a particular state government. As sir said, it is our pruning of the portfolio which is leading us to degrowth in the agri portfolio. We have been far more selective supporting the companies in terms of the capacity extended and the terms that we have offered. That is the reason for the significant degrowth. I think we are at the absolutely right spot now in terms of agri profitability, and this is supposed to be a U-turn. We don't expect any more degrowth to be there, and we expect that portfolio will keep on improving going forward. Thank you.
Oh, thank you, sir. Thank you for that. Sir, just one more question from my side. Sir, in the overall decline of GWP, what would be your from 5% to 4% cessation? Because of that, what would have been the impact? Is it because of the mandatory cessation came down? Because of that, what would have been the impact? And what is the overall general trend, which would have been otherwise contributed?
See, Arjun Saab, if you look at the way we have gone about pruning our portfolio, this was done as per a very decided and a pointed strategy. We wanted to, write healthy business on our books and do away with all the business that had been hurting us over the years. That is why the degrowth has been witnessed. But as Mr. Joshi very correctly mentioned, we are at a point of inflection now, and henceforth the corrections that we were intending has largely been carried out. So now it is a time to look forward and look upwards. Now about the 5 to 4% that you speak about, well, obviously, if you take a portfolio of the total Indian non-life insurance market, which is about 2,20,000 crores, the 1% will clearly be about 2,000 crores. But on the same breath, you must also consider that this is a high growth market. If we see the June figures, there has been a growth, and a growth that is upward of about 20% year on year. So that is also compensating. So there are various ways and means. So obviously the decrease will affect our top line to a certain extent, but fine, there are enough ways for us available to make up that shortfall as well.
Okay. Thank you, sir. If I can just squeeze in one more, do you foresee this entire mandatory cessation going away? In that case, what would be, how the impact would be, or how would you react? Just a hypothetical question.
Arjunji, as we just said, see, there was a time when the mandatory sessions was 30%. That time the market was young and everybody needed the support. But as markets mature, which is in India now about 20 years that we have spent in the private setup and private companies were also allowed, the obligatory sessions have come down 20 to 15 to 10 to 5 to now finally 4. So by that trend going forward, yes, there will be a day when the obligatory sessions will come to a naught. But till that happens, it will continue to be something that will come to GIC, and there will be other ways because capacity is required. The way the market is growing, capacity will certainly be required. The way the risks are now being identified and ways and means being sought to mitigate it, insurance and reinsurance will be required. So this market will require support, and GIC is geared very much to provide the support to the cedents.
Thank you, sir. Thank you so much. That answers all the questions.
Thank you. Participants, if you wish to ask questions, please enter star and 1. The next question is from the line of Yasir KM, individual investor. Please go ahead.
Hello, sir. Sir, I have 3 questions. One regarding the provision for investment loss. What steps will be taken by the company to reduce these values, because still it is in a higher rate, right? Then regarding the second question, this is regarding the net commission ratio. Compared to the competitor, I think it's really high, because some of the competitors I looked, it's just about 5%. And finally, regarding the performance of company for the investor, what steps will be taken by the management to increase the valuation? Okay, thank you, sir.
Mr. Yazim, your first question pertains to the investment bit. Now that, what exactly was it? Can you specify it again, please?
Sir, regarding the provision for investment loss, right? Last quarter it was thousands of crores. This quarter also we have hundreds of crores for the provision loss, right? For the provision for investment loss. So to reduce the value, any steps taken by the management?
Okay, so I'll request our CFO, Mr. Jayeshi Ranade, to step in here.
Yeah, good afternoon. Yes, this quarter also we have recorded around 163 crores of provision for investments. This is basically the provision which we are incorporating for equities, which are consistently below the book value for over 3 years. So this is a mechanism which we are bringing it into the book, so that kind of prudent provisioning is done. Doesn't mean that our investments has really devalued or any such things. Or going forward, definitely whenever the opportunity comes based on the market movements, the stocks which rise above the book value will be liquidated or will be replaced with the good stocks. So that is one of the strategies which we have adopted. Making a provision is kind of a sound accounting practice, and so we are adopting to this. I am sure as the market goes up, this provision will also have a reversal effect going forward. I think have I answered your query, sir?
Okay. Then the second one regarding the net commission ratio, because the competitors having very few, like 5% or something, but I think the HRA having it around 18%, right? So is this normal or it's I don't know about it, so please can you clarify?
I really doubt if there can be anyone who has a commission ratio of 5%. I'm not very sure where you're getting the statistics from. But
no, I looked for this one, ICICI Lombard last time. Last 2 quarters I was checking, it's around 5% like that.
No, sir, you see, reinsurance commissions are very different from a direct insurance company's commissions. So, a real apple to apple would be to compare reinsurance commissions of company A with reinsurance commissions of company B, or with GIC for that matter, being a reinsurer. So there, if you see, our approximate outgo of 17 to 18% is in fact quite good, I would say. It is a good commission ratio to have for the business that you are procuring. And it has been quite steady over the years. It hasn't fluctuated or gone up or down much. That is pretty standard for us. And with regard to your third question, Mr. Yadin, it's about the investor value.
Yeah.
The fundamentals that GIC has, the balance sheet that we have, our inherent strength that we have, the intellectual capital that we have built over the years, I think itself is testimony to the fact that GIC is a very, very solid company. There may be a gap between the investor perception and what the company is all about. But see, nobody can deny the fact that today the Indian market is driven by GIC. And that is something that we take a lot of pride in, and also something that we take as our responsibility towards the market. So it is now for the investor to see these aspects of the working of GIC.
Yeah, but as an investor view, we are having in a different situation, right? So I am asking that one.
Yes, I mean, if you go purely by the share value and on the market, yes, there is an erosion from the initial years, but I would always talk about the future that GIC has to offer, looking at our current very strong credentials now.
Okay. Thank you.
Thank you.
Thank you. Participants, if you have any questions, please enter star and 1. Ladies and gentlemen, if you have any questions, please enter star and 1 to ask them. We have a question from the line of Arjun from Spark Capital. Please go ahead.
Yeah, hello sir. The impact of floods have already been factored in this loss ratio, which happened across states in this last 2 months, or will it be in the next quarter?
The impact of floods. Actually, the IBNRs already take care of this. When we close a quarter, the actual valuation is done about the IBNRs, which is incurred but not reported, and an additional reserve is made for incurred but not enough reported.
Okay.
And they take into consideration all the events that have taken place, which may affect our book.
Okay.
And a reserving is made for that accordingly.
Okay.
So the figures that you have are inclusive of the IBNR and IBNER figures.
Okay. Sir, the foreign loss ratios or the incurred losses that we have been disclosed has improved significantly. If you can give light on what has happened in the foreign book, where we see positives, or whether it is because of the rates hardening, that would be helpful.
I just request Mr. Joshi to come in.
I think it is a result of, it is a mixture of everything. It is a rate hardening as well as pruning, as also our being more selective. So it will gradually be more apparent in our results going forward. That is what we expect.
Okay. Thank you, sir. Thank you.
Thank you. Participants, if you wish to ask questions, please enter star and 1. The next question is from the line of Deepak Sonawane from Haitong Securities. Please go ahead.
Yeah. Thank you, sir. Am I audible?
Yes, very much.
Yeah. Yes. So my first question is on growth. Basically on foreign book. So like 2 or 3 quarters back, we were quite optimistic on foreign motor, right? And in Q4 and even in Q3 FY22, we were kind of cautious on that, specifically in US motor. So is this trend continuing even in Q1? I mean, the 21% degrowth we have reported, was it because of that, from that angle, should we look at?
Deepak, is not the motor alone. There has been a pruning of the portfolio. Motor certainly has contributed to it. It has come down by about 20% from the Q1 of last year. So what you're talking about, the US motor, is something that obviously is continuing. I would request Hiteshji to add something to it.
It is the same thing. Essentially, we are taking a step back in preparation for taking a step forward. So, bit of consolidation. We are getting familiarized with this particular segment of the US market, which is a very peculiar model in terms of the way underwriting and distribution takes place in that market. So, it is a kind of preparation for more growth in that market.
All right. And my second question is on the underwriting losses that have been reported on a health side. If you compare our underwriting losses and compare to what all other non-life insurers have reported for Q1, there's some kind of, we see that some kind of mismatch, because they have reported a kind of strong improvement, especially in claims ratio. So and compared to that, our underwriting losses still I'll say still way behind. So is there any lag effect are we experiencing in terms of claims settlement, or is in terms of any underwriting change we have done for the quarter?
See, Deepakji, there will always be a lag effect between an insurer and a direct insurer and a reinsurer. So, because after the quarter gets over, only then will they submit their statements of account. So what is Q1 for them will be Q2 for us. So a better way of comparing how we have performed in this quarter is to look at the way the quarter of the previous year, that is 30/6/2021, has ended. And there, if you see, the claim ratio has come down. The incurred claim ratio as a percentage of the net premium has come down from 129 to 109. Sorry, this is health. Let me give you the one for overall is 104 to 94. Right, so 104 to 94.9.
So 94.9% combined ratio for health for Q1, right? This quarter.
That's correct. As compared to 104 for the previous quarter.
Okay, got it. Thank you.
Previous quarter means previous quarter last year. I mean
Q1 FY21, right?
That's correct.
Yeah. And what was that number for Q1 FY22?
So that's what I'm telling you, that the Q1 21,
okay.
I mean 36/21, we added at a incurred of 104.
Okay.
Incurred claim ratio of 104, which for 36/22 has come down to 94.7.
Okay. Thank you.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. Ladies and gentlemen, if you wish to ask any questions, please enter star and 1. We have a question from the line of Manoj Shah from Black Curve Investments. Please go ahead.
Yeah, good afternoon, gentlemen. My question is, as you said that you get claims after a lag, are we done mostly with the COVID claims, or are there still to go? As you said, normally you get claims from the PSU insurance with a lag of 1 quarter or 2 quarters. That is first question. Plus, also, as you said, you are repricing your premiums. So has it been done? It has taken effect, or it will come with every quarter? We will see some improvement in the premium pricing. Can you comment on that?
Manojji, the lag that we spoke about was true for the market. It is not a public sector or a private sector thing, because when 36 happens and the accounts are closed for a Q1, the private sector or the public sector put together, that means the non-life insurance market will report it 45 days from then. So that means those figures will appear to us in Q2, which is 30th September figures. So that lag is something that is a part of the way the business is conducted globally. It's not something that is here in India, but globally this is how it all happens. that the lag effect does take place. Now about the COVID claims, see, largely the COVID claims came from our foreign writing, because as you know, in the Indian market, we were insulated by the GI Council, which said that the BI claims in the absence of PD is not tenable. Now, with a large part of our book being domestic, that was already taken care of. For the foreign ones, we had been getting those claims, but they were already provided for in the IBNR and the IBNR. So, it has already been taken care of. We also have some claims in the life portfolio where I'll request our life actuary to just give his thoughts so that you get a better idea about how the whole thing moves.
Yeah, hi. With respect to the COVID claims on the life side, yes, the claims are still being reported, but more or less they are at a manageable level now. Most of the COVID claims that we have seen on the life side coincide with something that we commonly refer to as the second COVID wave in India. That is the accident quarter or the event quarter can be clubbed as April, May, June 2021. So given that we are 4 quarters ahead, most claims related to that quarter have been reported. But still, yes, COVID claims continue to be reported, but the magnitude is, how I should put it, the magnitude is very small compared to what we had observed 2 or 3 quarters back.
Okay. My second question was with respect to the premium repricing, because I've been listening to your calls for last few quarters. So, but see, we have been talking about premium repricing and bringing down the combined ratio. So, but that has not reflected in the numbers, or maybe it's too slow to get noticed as of now. Because if you notice from last 7-8 quarters, like I've been on the call, so it seems like nothing has got reflected in the stock price as of now, because see, either your combined ratio has to come down or the premium has to go up to make the company profitable, which you have been striving for. So if you can comment on the premium repricing process.
See, Deepakji, even for life as also for non-life, the premiums have seen an northward trend. But to specifically answer your combined ratio query or question or point, see, in Q1 of last year, the combined was 123, which is down to 110 this 110.97, okay, 111 this year in this quarter now. So there is a very perceptible and a very huge jump in the combined in a better sense. So, I mean, whatever efforts we are making is coming to light and is telling us that we are on the right path. So there is no doubt in our minds that we are on the right path, and whatever we are doing is leading to us being a much more healthier corporation going forward. So that is something that is very, very evident even from the figures that we have in front of us.
So can you comment? So are you? Can we see at some point in time, 2-3 quarters down the line, we can have a combined ratio below 100? Can we see that by the end of this year?
See, Deepakji, that is the endeavor. Now, if you look at the way GIC performs, essentially almost 90% of our business happens on just 2 dates, 1st April and 1st January. 1st April when the domestic insurance market renews, and 1st January when largely the international book renews. Now, in these 2 dates are the only ones when you can make certain differences. So obviously, it's not something that's going to happen overnight. And plus, GIC being a large ship, it will take time to turn around. But if you see the figures we have in front of us, I think the numbers are very convincing.
Yeah, what I saw this quarter, it has been around combined ratio at around 111. But if you see, compare it with the quarter-on-quarter with March quarter, it was like 74%. Okay, that seems to be a little aberration kind of it. But last year, it was like 123. It has come down to 111. But it's still hovering above between 110 to 120, 25 kind of it. So can we see it going down below 100? My question is that.
Deepakji, that is what I'm telling you, that we are working towards making it go down below 100. But March quarter that you're talking about, I mean, don't take it quarter on quarter. We closed March at about 112 overall combined. A better measure for our performance would be taking this Q1, comparing it with the Q1 of the previous year, because that is how the book is best compared. So there is definitely a come down, and this trend is something that we feel is going to continue as we move from this quarter to the next and to the quarter thereafter.
So,
come down to 100.
okay. So, are we trying to book good quality business so that we have a lower and lower combined ratio kind of it, and leaving some business so that even if there is no volume growth, but at least our combined ratio remains within the reasonable level?
Exactly, Deepakji, that's what we are saying. That is the entire endeavor. That is why you see a degrowth, because we have pruned our portfolio. We are becoming very selective in what we write. So we have sacrificed our top line at the altar of the bottom line.
So, see, but nowadays what we are seeing is like the company is getting claims with one or other the cat events, either in the international market or in the domestic market. Earlier we had COVID, before that some other things were there, the cyclones were there. Now recently, last few months, we have seen floods. So it seems like a never-ending kind of a process for someone who is invested in a company and been tracking for over last 7-8 quarters kind of stuff, even much beyond that. So my what I want to bring to your notice is that investors' patience are running out. Those who have been holding your company share for quite a few years.
See, Deepak ji, reinsurance is a long-term business, and never forget the fact that we are in the business of risk. So we cannot shy away from risk. We have to embrace it. That is what the business is all about. Exactly what we are doing. What we are being careful is, who do we embrace or who do we take into our fold? Is it something that is perennially risk-making, or is it something that has a very low possibility or a probability of having a loss? So that is why we have to prune our portfolio and make it healthier. Exactly what we are doing. We cannot say that we will not write floods. If you don't write a peril of flood, what do you write then? We are in this business. The whole idea is to choose which ones to write and which ones to let go. Exactly what we are doing, and we shall continue to do that in our portfolio, because we are accepting only good business now.
So can we assume that next 2-3 quarters we will see some marked improvement as we move on during this year?
Deepak ji, that marked improvement is already very visible in the figures of Q1 that we have placed before you. And yes, going forward, most certainly it should improve further.
Just to clarify, my name is Manoj.
I'm so sorry, Manoj. I'm so sorry. I just got confused because Deepak was the earlier gentleman.
Okay. Thank you, sir, because I've been following your company for quite few quarters, so I've been trying to see when can we see some improvement, but as of now, it's coming very slowly that it is not getting even noticed kind of stuff. So that's what I want to just bring to your attention. Okay. Thank you. All the best.
Right. Thanks, Manoj.
Thank you. Participants, if you have any questions, please enter star and 1. As there are no further questions, I now hand the conference over to management for closing comments.
So thanks everyone for your time today in the afternoon. As is very evident, we have been working on a very well thought of and charted path wherein we intend to get our combined within control, get it as close to 100 in the shortest possible time. And going forward, we shall continue to make our portfolio healthier so that you have a more solid balance sheet for GIC, which is what a reinsurer is all about. And in the long term, we emerge as a much more healthier and much better company than we were yesterday. This endeavor shall continue. And thank you again for your time today. Goodbye and take care.
Thank you very much. On behalf of General Insurance Corporation of India, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.